Bitcoin has dropped 13% in the last 24 hours. But where will it be by the end of the year? 140,000 by the end of the year, or please like, subscribe, click the notification bell, upvote, and comment. All of that makes a difference. If you're watching this on YouTube, come over to BitTube. You can also find me on Bitchute and on library.tv and also on odyssey.com. Those platforms also allow you to earn cryptocurrency and reward me in cryptocurrency should you wish to do so. Join my official Telegram announcements channel, and please do follow me on Twitter, CryptoRichYT. Get yourself a good quality hardware wallet. I recommend the EliPower wallet. Discount with the link in the description below. This is Bitcoin on the weekly chart on CoinMarketCap, and you can see here the low in March 2020, and it really has been week after week after week, apart from a little dips here and there, of just steady upward growth, and then it started shooting up really in October with bigger green weekly candles. And of course, corrections are healthy because nothing goes up forever, even in a bull run. So we've got this correction from this all-time high of about $41,500, and according to the Fibonacci retracement over the long term, we're looking at a 0.23%, 0.236 retracement, which will be about $32,800 roughly. And it looks like it's just kind of bounced off that. It didn't quite reach that. Let's have a look on the daily chart. Get yourself a VPN to protect your online activity. Keep yourself safe and secure online. Use my affiliate link and you'll get a discount. And I just want to remind you, I'm not a trader, but I do watch the candles, and I'm interested in medium to long-term price action. I'm going to let you know about something which you can use in order to trade successfully and effectively with Bitcoin or any other cryptocurrency that you're interested in. So here on the daily chart, Bitcoin hasn't yet touched the 20-day moving average. And ever since it broke out, really started breaking out in the early October from the 20-day moving average, it hasn't stayed below it. It touched it here in about November, and then again around December, bounced around. And mostly it's just been up, just been up, just been up. Now it could be returning to this mean, this bull mean, which is $32,100 roughly. And then we want to see is if it dips below and closes below and stays below, then this retracement could be much bigger and deeper, or it may just bounce back up or consolidate. We shall see. But what I'm interested in is the long-term perspective. And I've been in Bitcoin, since 2017, or since before 2017, waiting for this particular bull run. Now, this article says that Bitcoin is going to reach $140,000 in the next bull run, which is 2021, and it is from toward November the 22nd of 2020. So in that regard, it's a little bit dated. However, the reasons that it gives for why Bitcoin will reach those prices are really useful, and I'll go through those in a moment. This article from Crypto Potato says Winklevoss's 7-year Bitcoin price prediction comes true as Max Keiser envisions 220,000 by December 2021. So we've got 140,000 and we've got 220,000, and I know there's more predictions out there. Let me know, where do you think Bitcoin will end up December 2021? And what do you think will the high point be of Bitcoin's price this year? Let me know in the comments below. So in 2013, Gemini co-founder and long-term BTC supporter Cameron Winklevoss said that the cryptocurrency Bitcoin will reach a price tag of $40,000 faster than anyone imagines. So Bitcoin was $900 at the time, and he said it's going to be 45 times more valuable. Now, it's taken 7 years for that to happen. And he said at the time, if it happens, it will probably happen much faster than anyone imagines, which I think certainly was the case for me when it was nudging 20,000. I didn't think it was going to go to 40,000 so quickly. Now, in 2018, Max Keiser, host of the Keiser Report, said that Bitcoin would end 2020 at about 28,000, which seemed unlikely given the bear market at the time. But if you look here on this tweet, his was more accurate than John McAfee's, Tim Draper's, John Peffer's, Kay Van Peterson, Yeet Saim, Cameron Winklevoss, Thomas Lee, Dan Moorhead, Anthony Pompliano, Max Keiser, and Bobby Lee. His next possible targets for Bitcoin are short-term prediction of 65,000, and he made this when Bitcoin reached the all-time high of 42,000, but he says that it will finish the year at 220,000. Now, we shall see, because if it does that, it'll have a market cap of $4 trillion, which would make it twice as valuable as Apple. Now, whether Bitcoin reaches 140,000 or 220,000 or even more, it is pretty settled, at least I'm pretty settled, that it is going to go up higher. Now, why is it going to go up higher? So let's have a look at this article, because it outlines the 3 reasons why Bitcoin's going to reach the heights that it is going to reach. And one of the reasons is worldwide quantitative easing. So everywhere, governments are printing money. They're increasing the supply of money. And when you increase the supply of money, especially in an environment where demand remains the same or even diminishes, because people are out of work, there's less economic activity because of the lockdowns, then you devalue that which you increase the supply of. I mean, it just loses its value. So through quantitative easing, it isn't that Bitcoin has gone up so much, it's that the value of the pound or the dollar or the euro has gone down. So that's number one. Number two is greater mainstream adoption of cryptocurrencies. So we have seen institutional investors jumping in to Bitcoin in this bull run in a way that they didn't do in 2017. As an example, PayPal has decided to incorporate cryptocurrency into their services. Payment company Square had acquired 4,709 Bitcoins by the end of November, which represents 1% of the company's total assets. There's MicroStrategy, there's Grayscale, and others that are big players putting their money into Bitcoin. So of course, with all this fiat money printing, this quantitative easing, people are looking for where can they place their money so that it doesn't lose value. You can't do that in the stock market because the prices are so inflated. The stock market is removed from the reality of what's really going on Main Street and in the fundamentals of the economy. That is a bubble. So the third reason is because all these players are putting their money in Bitcoin versus gold. Now, gold is manipulated through the issuance of paper certificates, which are traded. There's far more gold being traded on the gold exchanges than there is actual real physical gold. And Bitcoin can be used to trade goods and services much easier than gold. Now, I'm not anti-gold at all. I think it's useful to have precious metals and to have cryptocurrencies. However, there are advantages that Bitcoin has that gold doesn't. And two of those are gold is manipulated by the banks and it isn't as easily transportable and it's more expensive to store than Bitcoin. Now, the closing paragraph in this article I think is quite interesting and I don't agree with it. He says here, Bitcoin doesn't have intrinsic value. Its price is a pure function of supply and demand. And something else which he doesn't mention, which is it has value because people think it has value. Same deal with gold and silver and any fiat currency. It only has value because people think it has value. If I want to buy a Bitcoin and the other person who wants to sell it is offering a price that I think is too high for its value, I won't buy it. But also, if I want to sell Bitcoin, I can only sell it if people think it has value because the buyer will only take it then. Same deal with gold, same deal with silver, same deal with all assets. It's all a function of consensus. A dollar note has no intrinsic value. It's consensus, but this time enforced by the US government. Gold and silver have utility because they've got industrial uses, in jewelry or in medicines or electrics and everything, right? However, as units of exchange, that's only a function of consensus. And with gold, silver, and fiat, that consensus can be disrupted by state actors and by banks. It's much harder for state actors and banks to do that with Bitcoin and cryptocurrency. Now, that's just my opinion about it. Let me know what you think. And I was going to tell you, this is something you could use to accrue more cryptocurrency, especially if you're not a trader, because you can copy trade, or you can set up your own rules and the bot does it all. Affiliate link in the description below, which will give you a discount. All right, thank you. Between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich signing out. All the best. Bye-bye.